allow me to introduce a few key components of both tax-efficient asset growth and strategic distribution. Why does tax efficiency matter? Imagine taxes as termites, slowly eating away at the structure of your financial home. Now picture smart tax planning as the most effective exterminator in town. It helps protect your hard-earned money from taxes so you keep more of what's yours. Let me give you 3 tips to look for when considering tax-efficient investing while you are in your accumulation phase of life. Number 1, investment turnover. High investment turnover means the portfolio has a lot of activity. There's a lot of trading, buying, selling, and all of that buying and activity that's going on creates costs. And those costs go to you. And that could be costs associated to the investments. That could be taxes that get exposed to you as the investor. So be careful when investing in funds or ETFs that are exposed to high investment turnover. Number 2, the power of tax deferral. Think about fine wine or a classic car. They often get better with age. That's tax deferral. With accounts like 401ks or traditional IRAs, your money has the potential to age by accumulating value without being taxed every single year. And when you finally uncork that bottle at retirement, not only could it taste better, but it could also be taxed at a lower rate. Now, number 3, which is my favorite, tax-free. Tax-free is tax-free. No matter what happens as you grow that account, you do not pay taxes. Interest, dividends, capital gains, tax-free. That's huge. So you're not paying money to Uncle Sam for things that you don't need. So you keep more, your family keeps more, and you earn more. So take advantage of tax-free where you can. Now let's shift our focus to distribution. How do you make the most out of your money during retirement without handing more away? Well, you need to be cognizant of how you take it. The way in which you receive money from your accounts can create tax implications to you. So let me give you 3 tips. Number 1, strategic withdrawals. The timing of what accounts you're taking money from and when is very important. Think of various accounts that you've accumulated as the ingredients when you're making a dinner. So each ingredient has its own flavor. I like to think about Taco Tuesday. Most people like tacos, but not everyone wants habanero on their taco. But some people may. So think about what makes sense and when, and talk to a trusted financial professional or tax professional for help there. Number 2, required minimum distributions. After reaching a certain age, the government will force you to start taking money out of those tax-deferred accounts. Now remember, you have the advantage of growing these accounts tax-deferred all of these years. There is a catch, and that catch is the government wants a piece of that. So when it comes time to start taking those distributions, make sure you know what that will do to your tax footprint. Number 3, taxable accounts and timing gains in those taxable accounts. Timing is your best friend here. In a taxable account, you have more control over when you realize capital gains and losses. So strategize when to sell to offset the gains with losses, and effectively doing your best to reduce your tax bill. Tax efficiency is not a one-off task, it's a marathon, requiring a blend of preparation, endurance, and strategy. But you don't have to go at it alone. Financial advisors are here to assist you. Tax professionals are here to assist you to figure out what fits you best. Being tax savvy is not just a short-term strategy. It's also about building a long-term plan for a more financially secure future. It's about keeping more in your family's pocket. It's about allowing you to to do more because you've been able to retain more. After all, tax optimization is a personalized journey, and a one-size solution doesn't work. It requires continuous conversation and monitoring on an annualized basis. Do you have questions on tax-efficient investing and distribution planning? Visit our website, linked in the video description, to schedule a complimentary appointment with a member of our advisory team. Until next time.